So the stock of the day is Zip. Now, shares absolutely crashing in the wake of its results. At one point down, 37%.
Wow.
That's just past noon here in Sydney. And that is despite Zip reiterating its FY26 guidance. It posted record cash EBITDA, which was up by close to 86%. It reported a lift in total transaction volumes being driven by its US business. Active customers were up 4%, with US users up nearly 10%. So what spooked the market? I can't say I know exactly, but I will note that revenue margins slipped slightly. Net bad debts edged up to 1.7% of that total transaction volume. CEO Cynthia Scott has hinted at a dual listing in the US. She will be based there from here on in, although that is dependent on market conditions. So, Mark Gardner, MPC Markets, I will start with you. What's up with Zip, or what's down with Zip to be exact?
I think the expectation is probably a little bit high. I think there's a few brokers looking for a real blowout half. And that compressing margin is because the volumes are up in the US, so the margin's lower in the US. So overall, that brings the average down. And look, and the bad debts, I mean, it's not that bad at 1.7. Realistically, it's not. I mean, it's not a bank loan. People know this. They're all micro loans. It's not like they're lending huge amounts of money with no credit checks, etc. So I think there's a lot of positives within it. Look, Joe, to be honest, right here, right now, the way that we've really changed our approach at MPC, whereby basically with computerised trading systems, etc., these moves are very severe and very fast overall. So we really do pull. We'll buy buy one or two clips from fundamentals, which we'd be happy to buy today in smaller volumes, say a quarter of what we'd like to buy overall. And then essentially we wait for the technicals or the price to stabilise before we consider buying the other half. So it's not bad value here at the moment. I don't think you need to rush into it because we're getting these severe moves, and these severe moves have happened in the past, but they used to bounce back pretty quick usually, and they don't tend to anymore. They tend to stay a little bit lower for longer. And the problem with Aussie reporting season is you don't want to have to wait till August for that to happen. So particularly if we get sort of the credit in the US is really under the pump at the moment. Consumers are under a lot of stress. So this would be one that I'd probably watch list it for now because I think it can get worse. Not that it should get worse, I just think it will, because the momentum that goes with these some of these stocks lately, particularly stocks like Zip, you think it's cheap and then you're 15% out of the money. So yeah, I'd be waiting and just putting on the watch list for now. But
okay.
But if you're really keen on it, it's maybe a speculative buy. But I'm mirroring towards a buy. But I just think you can be patient, particularly on a savage move like this.
So Howard, when you look at Zip, it may be approaching a decade for the filters, but is this a value trap or a great buying opportunity, a stock on sale?
Funnily enough, I bumped into one of our members early this morning. He lives not very far from me, and we happened to see one another. And I hadn't noticed yet anything about Zip, and I didn't know it was going to be the stock of the day that early in the morning. I'd gone for a walk very early in the morning. And he said to me, "Did you see Zip got unzipped?" Okay. And I had a chuckle and I said, "What got unzipped?" He said, "Well, that beautiful story that Zip had when it didn't make any profits. So everybody could believe it was going to be as big as anybody wanted to believe. You know, when there's no profits to measure by, you can imagine whatever you'd like to imagine. It's like going to a sci-fi movie. You can have great fun imagining. Now that it actually makes a profit, people can see what the business is actually worth. And it's definitely not worth the $14 a share that it was when it was only a story some years ago.
But I will say, Howard, it's now trading at $1.79. So maybe it is. Is it worth $1.79?
Well, good question, but we've only got 1 year profitable history to go by. And the last several years have been a time when most credit has been okay. We haven't had tight credit for consumers. and lots of bad debts. I mean, you can tell it from one of the other companies we're going to be talking about a bit later, Credit Corp. And so I would say our members will look at this and say, we want, return on equity to be consistently high. It's only made a profit 1 year. Let's look at it again in 5 years' time and we'll decide then. But I can't imagine any of our members getting excited about it, but it's certainly cheap today compared to what it was, because its PE now will be probably around about 30, whereas it had a PE of infinity for about 8 years.
I remember back then. All right, so that's an avoid for Zip from Howard Coleman from Teaminvest.